All righty. Hey there, folks. How you guys doing today? Today we are here with my man, Aaron Kopczyk. He is with Apollo Title Agency, and let me tell you, Aaron has got my butt out of a lot of fires over the years. Let me repeat that. He's got my butt out of a lot of fires over the years, and it's because of him that I was able to close the deals in most cases that I was able to close. So first off, let me thank you publicly for that, Aaron. Let me
Very welcome.
There you go. Now, here's the thing, folks, and this is what's really cool. As you guys know, one of my main things that I love to do is I like to take complex things, especially those complex things in real estate, and make them simple and understandable for the everyday person. Because ultimately, that's the only way you learn. And two, I know that real estate, in my opinion, is probably one of the best ways to create wealth for generational wealth. And if you understand what to do, it's easier for you to actually do it. That's why we're here. And that's why Aaron has agreed to come on today and talk to us about title and title insurance and all the things associated around that. Because let's be honest, even in my experience, and I've been around real estate for like 30 years, man, I can honestly tell you in my head, it's really simple. You get the deal. Then there's this middle thing, this middle black box, and then you close the deal.
You send
All of
it to
that stuff
title.
that you send it to title, and then you wait, and then you close. They tell
Yep.
you when they're ready to go, and then you move forward. I have no idea what happens and all the back end stuff, but I know it is amazingly important. As I was just talking about earlier, especially as I get older and get into some more hairier deals. Ooh, there's a lot of stuff going on behind the scenes that okay, I'm oblivious about on purpose. So, but that's where you come in, and that's where
Yeah.
Aaron has helped me out. So, Aaron, how about this? Why don't we start with a nice softball? What is title?
Title insurance is a title policy or an insurance policy that covers you for any, property related issues before you bought the property. So a
Like
lot of
liens and stuff like that?
Yeah, so a lot of the issues that you'd see that you'd file a claim on are unrecorded mortgages, unrecorded liens, interests. For example, I had one, I'd say a couple months ago, where the closing was standard cash deal. Everything was perfect.
Okay.
For me, I was working up, everything's perfect. And then I'd say a couple of weeks after the closing, some random person came and called us and said, "Hey, I have an unrecorded deed, or it's not recorded, but I have he didn't say I have an interest in the property, but he's like, I got a deed signed from the seller. This is my property." And we did some investigating and we found out that the seller that had the property signed over a quitclaim deed to this maintenance guy and said, if I don't pay you
What?
for your services, then you can have the property. So apparently she didn't pay him for his services. There's nothing
Ooh,
recorded, but he had this unrecorded deed, and that's an unrecorded interest. So he has an interest in that
yeah.
property because of that deed that was signed. It doesn't have to be recorded. It's just a signed
Okay.
deed. So I'm not sure exactly how. I think the claim is still in process. They're doing investigating,
Okay.
but a buyer that gets an owner's policy, they'll be covered for any money that has to be paid out, or even if they end up determining that that person that has the interest owns the property or should have the
Mm-hmm.
property, and he doesn't want to
Mm-hmm.
sell to that buyer, then that policy pays out that buyer whatever they paid at closing, to purchase the property. Or like,
Really?
yeah, there's liens that are unrecorded or may have gotten recorded in their liens from a prior owner.
Okay.
And sometimes title companies make mistakes. They maybe
Yeah.
the recording was referenced wrong online, and all of a sudden after closing, find out that there is this lien that needs to be paid. Your title insurance covers you. So I always recommend getting title insurance because it's helped out a lot of people. You hope that you'll never have to use it, but it's just like health insurance. You hope you'll never have to use it, but you may use it. So
Okay. Okay. So first off, I just learned something really, really important. I had no idea that an unrecorded lien is valid.
yep.
or an unrecorded interest
And
is valid. I always thought everything had to be recorded to,
well, I
you know,
no,
to be valid.
I always tell people so that they get the idea. So like at closing, as soon as you sell a property and you
Yeah,
sign that deed over to that
yeah.
buyer is 100% the owner at that time. Like once you disperse the file. So recording a document makes the public aware that, something was recorded, that the deed transfer was done or a mortgage is recorded or something. But
Yeah.
it doesn't have to be recorded. So that's what title insurance covers in case there is anything like that.
Ah,
Yeah, the recording
ah,
a document makes the public aware, but it's yeah, as soon as it's signed and notarized,
okay.
then it's in full effect.
There we go. So it's kind of like a sales contract. It's not when it's when the seller when the buyer makes an offer and has the thing nice and signed. It's when the seller decides to actually sign it that it becomes a valid contract.
There you go. Yeah.
It's not when anybody decides. It's not when the seller decides to share it with the rest of the world.
Yep.
Ah,
Exactly. Exactly.
ah.
So yeah, and then recording it makes the public aware and it puts it out there. Because if we didn't have that recording process, then it would
Uh-huh.
just be a mess. Like you would have to be like, oh, you got that deed or something, can
Okay.
you dig it out of your records? But recording just organizes everything and makes the public aware that there's something
Okay.
recorded. So yeah.
Okay. Man, I, I, Wow.
Yeah.
Okay. Okay. So let me ask you a question. And this was, and I don't want to get too far on this one, but this actually question was asked to me from an appraisal client just yesterday. Long and the short of it, she's got a house. Her mom's still living, by the way. So let's start there. So this is not a probate situation. Her
Okay.
mom owns the house. She lived there for 50, 60 years, and she wants to sell the house to the next door neighbor. The next door neighbor told the daughter, because the daughter is now handling everything for the mother, but the mother is still lucid and everything. And she, so they, if assuming they come up with a price that they both agree on,
Hmm.
the neighbor said, "Hey, you don't have to do anything. All you have to do is go down to the county and just write a quit claim deed, and then we're good."
Yep. So that
What's a good? What is that?
a quick claim deed. So I see that a lot. So a quick claim deed, well, let's go back to a transaction that's insured with a title company. So with us,
Okay.
when we're insuring the transaction, we're going to issue a warranty deed. It's basically the seller warranting the property. It's when a title company issues a policy on the transaction. A quick claim deed can be done by anybody. You can even handwrite
Okay.
a claim deed, which usually it'll get denied from the county a million times before they actually take it. But quick claim deeds basically it does several different things, but it's used when there's no title insurance, no title company. Like for instance, say you own the property in your personal name and you want to transfer it to your LLC, just do a quick claim deed. No
Okay.
insurance, all you're doing is transferring title. Say, for like the case that you gave, this old lady wants to sell the property and this buyer feels comfortable enough purchasing it without getting in title insurance or title search. All she
Mm-hmm.
do is prepare a quick claim deed, have her sign it, notarize it, and then record it, and it transfers title. So it's just a document transferring title without an insurance policy. And
Okay.
that's basically it. Yeah.
So just to make sure I understand, title insurance in these purchase situations is there to really protect the buyer, or is it the
Yes.
seller?
Yeah, to protect the buyer. So it's
Ah,
customary in the
okay.
state of Michigan for sellers to pay for the title insurance policy, but it's actually for the buyer. So if you look at a title commitment, you'll see that we list the insured as the buyer. So it's insuring the
Mm-hmm.
buyer because they're purchasing the property, and then it's going to be, you know, on them if there's any title issues. They're the ones that are going to have to file the claim. And they're the ones that just put out all this money to purchase the property. So the insurance policy covers them.
Got it.
Yep. And then the seller basically works with us as the title company to clear any issues, order mortgage payoffs, if we have to order
Mm-hmm.
liens like that. But yeah, it's at the end of the day, it's for the buyer.
Okay. And to take that one step further, once the transaction is closed and everything, and then all the dust is settled, and somebody like in the instance you brought up before pops up, the seller, the seller is out of the picture, and now the title insurance company takes the spot of the seller to make sure it gets cleared up. Is that what I'm
Yep,
understanding?
exactly. Yep, exactly.
Okay.
And another thing that I'd also like to mention that actually happened last week is I know everybody can't close with me, even though I want them to close with me, but they
Absolutely, and they
got,
should.
yeah, exactly. So I've got a client that had to use the seller's title company, and this title
Uh-huh.
company ran, the title search and everything. And there was this old mortgage from like 20 years ago or something. And my client, he's like, "Hey, I have to close with this title company, but can you take a look at the title commitment to, just make sure we're good?" And this title company, instead of telling the buyer, they put that old mortgage in the exceptions of the title commitment. So the buyers purchasing the property taking exception to that
Oh,
mortgage. They probably felt confident that that was paid off, but
uh-huh.
they were sneaky, and the title company added that exception in the title commitment, and the buyer was about to buy the property, take an exception to it, and say, he, I don't know, 6 months down the road, this lender comes and tries to foreclosure, says, "Hey,
Yeah,
there's a $20,000 balance." That's 100% on the buyer because they took exception to it. And
yeah.
just like quitclaim deeds, if you purchase a property via quitclaim deed and you didn't have a title company run its title search and give you title
Uh-huh.
insurance, then if there is a mortgage out there that they didn't find, then that buyer is responsible for it. They can go back and try to sue the seller, but it's the buyer's responsibility after that quitclaim deed was recorded, signed and recorded. So,
Wow.
and give you another scenario.
Please
So
do.
this was crazy. So down in Florida, when I started in title down in Florida, actually, I started in the
Is your
investor
your
world.
brother still down there, isn't
He is. Oh, I got another story I'll tell you after that, which is kind of
he?
crazy.
Okay.
But so, anyways, there's this lady. She bought the property. She got it on quitclaim deed. So it was her. She was basically the tenant living at this house down in Florida. The owner ended up selling her the property for, I don't know, 45 grand. It was in Orlando. And he's like, "Let's just do a quick claim deed." She had no idea. She didn't know what the difference was between a quick claim deed, a warranty deed, getting a title policy from a title company. So she ended up, many years later, selling the property to a buyer who was getting a loan, and obviously will get an owner's policy and a lender's policy for their lender.
Hmm.
And I ran the title search and I found a $1,400,000 lien on there and three mortgages.
What?
Yeah, so the city down there, if there's like say a broken down car in the drive or in the yard or a window is cracked, they'll tack
Yeah.
on anywhere between $250 to $500 per day. And she didn't know about that. So
Oh,
I helped her get the lien, the $1,400,000 lien removed, because there's some like legal loopholes down there. But there are
sure.
still those three mortgages, and one of them was paid off, but two of them had a balance on it, and they equaled, I think, like 80, 90 grand. And she was like, I had to tell her that, and she was crying. She's like, "I wish I would have met you sooner. I wish I would have gone through a title company and gotten title policy." But she was responsible for having to pay off those mortgages because she got it on quitclaim deed without having a title company do a title search and issuing a policy. So I think
Oh
she
yeah.
actually tried to sue the guy that sold it to him. He got out of town and didn't do, he got all that money not having to pay off his mortgage. So
Absolutely.
I always recommend going through a title company, even if you want to do something, do a quick claim deed. Just call me or any title company and have them do a title search. It's called a pre-title, and
Hmm.
it's basically just a full title search. Just make sure there's no issues, no liens, mortgages, interest, stuff like that, and before
Hmm.
you get that quick claim deed, so you can feel more confident. So, yeah,
Absolutely.
and the other
Absolutely.
thing I'm going to bring up about my twin. So he's down in Florida. He does investor files, wholesale files down in Florida. Obviously, I do them here in Michigan. And I got a new wholesale or assignment the other day. And the wholesaler ended up like calling me and he's like, "Holy cow." He's like, "You sound just like my title guy down in Florida." I'm like, "Really?" I'm like, "My twin brother does title down in Florida." He's like, "Do you know Ryan Kopczyk?" I'm like, "Are you kidding me?" I'm like, "That's my twin brother." He's like a big client of my brother, and I'm doing a Michigan wholesale deal for him right now. And it's just
There you go.
such a small world.
It is a
So,
small world. It is.
yeah,
But by the way, your brother, awesome dude. He helped me with a deal that I was doing down there in Florida last year.
that's so
I think.
cool.
I think. I think.
I
So there
love
you
that.
go.
He
I know.
knocks out your Florida deals. I knock out your Michigan deals.
There we
It's a
go.
dream team.
You got me
Dream
taken
team.
care of.
Yeah,
And
that's right.
if I remember correctly, you're expanded, right? Now that you're with Apollo, now that you've started Apollo Title Agency, you do stuff well in multiple states across the nation,
Yeah.
right?
Yep. And
We'll
Florida
talk
is
more
one of
about that
them.
later.
Yeah.
And
Florida is
Florida
one
is
of
one of the states.
them.
So you mean
Yep.
I don't have to call Ryan anymore? I can just pick up the phone and
No,
call you?
you don't. I told him I'm not going to steal any of your current clients, obviously. I'm not going to do that to him. But yeah, I close anything in the state of Florida now. So,
Okay. Okay.
yeah.
There we go. There we go. Quick question. I want to backtrack a little bit. We were just talking about two different deed types
Yeah.
and warranty deeds and quit claim deeds. What are the differences between those other than the fact that I can write a quit claim deed? Is it quick claim
Yeah.
or quit claim?
It's funny. I always used to call it quick claim, but it's quit. QUIT.
IT.
Quit claim deed and quit claim deed. That's hard to say sometimes, but quit claim deeds are done obviously without title insurance. All it is just transferring title from one person to the next. That's it. There's
Okay.
no strings attached, nothing. A warranty deed is what title companies use. There's multiple deeds actually, and they all
Okay.
are pretty much the same. But the warranty deed is when there's a title policy that is attached to it and the property is insured. And basically, it's the seller signing a warranty deed, stating that they pretty much assure that there's no issues or defects or anything, you know, that we didn't catch. So it's just the
And
seller
that's
signing. Yeah, like an
there we
owner's
go. That
affidavit that the seller will sign, stating there's no issues that didn't pop up. This warranty deed is the seller signing off saying, yeah, I reassure that this title is good.
okay.
So
Which is why a title company is willing to insure on the deed
yep,
because the
exactly.
owner has the seller, yeah, the seller has decided to has affirmed that they did everything the way they're supposed to do it,
Yep. So
right?
like when we have a transaction, say I have a transaction with you, and all of a sudden there's an old mortgage from the prior owner that is
Mm-hmm.
popped up. The first thing I do is I look at the last deed of record, and if it's a quitclaim deed, then
Mm-hmm.
that's hopefully there's no balance because the buyer will have to pay for it.
Okay.
But if it's a warranty deed or a special warranty deed, anything like that, to me that says it was insured. It was an insured transaction. So we can reach out to that title company that did that transaction and obtain a copy of that owner's policy. And then we
Mm-hmm.
can put that in our file and rely on that to close without having to get any payoffs or anything like that, because we can fall back on that policy and file a claim if we have to.
Okay.
So that's
Okay. That makes sense.
getting more depth into it. But yeah, that's why it's always good to get insurance policy, because I've seen so many different things where we needed insurance policies to rely
Uh-huh.
back on. So it's just way better for the buyer.
Okay. So we talked about those two types of deeds. So the one thing that I immediately thought about, and something we were hinting about earlier, were tax sales because we're about to hit tax sale season,
Yes.
right? Is a
Yep.
tax deed that I mean, I would assume is different than a warranty deed and a quit claim deed. Quit
Yep.
claim deed.
Quit claim deed. Yeah, say that
Quit.
5 times fast.
Yeah. So
So
what's the
yeah,
difference between that? What is it?
so
Is it officially a tax deed?
yeah, so you can call. So when you buy properties at tax auction, you can call them. There, so many people call them different things, but I call
Okay.
them tax title files, tax title deeds. So when you buy something at the tax auction, the county gives you the property on a quit claim deed. So
Okay.
title companies can't insure that unless, we do one of a few things. So the first thing I check is to see if that buyer or the owner ended up getting an insurance policy, because some people, when they buy it at the tax auction, they'll
Hmm.
automatically go to a title company and say, I just bought this at the tax auction. Please get me an insurance policy. So what we do as a title company is we know it just got sold at tax auction. We automatically order the FOIA package. It's called the Freedom of
Freedom
Information
of
Act. It's
information.
the foreclosure
Okay.
package. And then we wait for that to come in, and we run our usual title search. And then once the title search comes back, it's all clean. We get the FOIA package and we review it. Then we can issue a policy. So to go back to if we have a transaction where the seller who got it at the tax auction and they're selling to a buyer, we as a title company, we will see the last deed and we'll see that it's a quick claim deed from the treasurer. So we have to
Hmm.
stop and we have to either see if he had an insurance policy from a title company, which most of the time they don't. Two, they can go through quiet title, and that's to eliminate any possible interest on the property. So basically, quiet title can take anywhere between, I don't know, like 2 months to 4 months or 6 months. It can cost up to like $4,000. So it's a lot of money and a lot of time, and a lot of people don't have time. So they want
Hmm.
to go the quickest route, which is for us as a title company to order the FOIA package, and
Hmm.
it's full foreclosure package. And once we get that, our examiner does a full review on that foreclosure package, the FOIA package, and they are just confirming or reviewing and confirming that the whole foreclosure was done properly and that every interested person in that foreclosure was served properly. So if they
Okay.
weren't served properly, then you have that interest dangling out there. So then we have to go and either get a quick claim deed or the client will have to get quiet title done. I'd say 99.9% of the time, the FOIA package always clears it up. I've had one file where it didn't clear it up. There was this random interest out there where they were served but not properly. Or they weren't served and weren't served properly. So all we did is reach out to this person and tell them, hey, it went through tax auction. You'll never get this property, but you have an interest in the property. Can you sign this quick claim deed? And they signed it and we're good. But 99.9% of the time, the FOIA package will clear up your tax title file. And then we're
Hmm.
able to tell the company to insure the transaction to your buyer.
Can you
So,
can you insure it immediately, or do you? I
yeah,
mean,
yeah,
so
yep.
in this situation, you're talking about what it takes about 2 weeks to a month to get the FOIA package
It's like hit
and
or
to
miss
review it.
with, yeah. So with the county, if you just bought it at the tax auction, it
Yeah.
could take a few weeks to a month, maybe even more, because they got to put that all together and send it to you. But most of the
Okay.
files, they've already been through tax auction and it was sold, and now that person is selling it to a buyer. So we just order the FOIA package, and the process is you'll like if it's Wayne County, we'll email
Hmm.
Wayne County at FOIA.com or something like that, and we just request the FOIA package from them. Within, I'd say, usually a week, they'll reply and say your FOIA request has been
Is
granted. And then they'll send another email with an invoice, and usually it's for like $12. And then they'll say, please send a money order or whatever for $12 to us. As soon as we get that, we'll release the FOIA package to you. So we do that. We send them the
That's right.
check.
You got to get your
And then
pound of flesh. You got to
exactly.
got to
And then
get
they'll
it.
send it to us. And usually like I said, it's hit or miss. So I've had FOIA packages come back within a week. I've had some that went on like a month and a half. So usually it's
Okay.
around that 1 week to 2 week mark. But obviously we always try to rush and get them back as fast as we can. So that brings me to my next point for any wholesalers that are out there listening. Um, if you have a transaction, I'd always get used to asking your seller when you're signing the purchase agreement with them, especially like in Detroit or Oakland, say, did you buy this property from the tax sale? And if they don't know, or if they do know and they say yes, then that should automatically trigger you to either tell me, or you can even email Wayne County FOIA and order that
To
FOIA
get the
package.
package
That
to
way
get
you
it
can
going.
exactly email me the purchase agreement and then say, hey, Aaron, I just ordered the FOIA package, or it's already been ordered. Sometimes they'll have it even before they send me the purchase agreement assignment. And then we just review it. It takes about 15-20 minutes, and then we can, clear the file and close. So it's just
Okay.
staying ahead of, any issues that may arise in the tax title issues, show up
Okay.
all the time. It's a main common thing today.
Okay.
So,
Okay. So let me just recap. So here's what I hear you saying. If I were to buy a property, if I were at the tax auction today and I were to buy a property today, so I just bought the property today. If I wanted title insurance, I could have it within the month. You would insure the property within the month, assuming nothing major happens,
yep,
right?
exactly. Yep.
Okay, and that essentially means that I bought the property today, and I immediately go and I say, Aaron, I just bought this property. I want to get some title insurance on it. Uh, Hook me up. You do your thing, and usually within about a month, you're like, okay, Jimmy, here's your title policy.
Yep.
Bada boom, bada bip, and we're done.
Yep. And basically with that, it's not like a regular closing where you have a deed and all that stuff and buyer and seller.
Yeah.
So that's called a title insurance only transaction. So I open the file, I order the title
Okay.
search, and then most of the time it's always clean. Everything gets wiped out in the foreclosure. But basically we order the FOIA package, and then once that FOIA package comes back and we have our title search in, we review everything, make sure everything's clear, and then when I prepare the settlement statement, all you see on there is $100 settlement fee for me, and then there
Mm-hmm.
for Apollo, and then you see the title insurance premium, and that's it. So you're just basically
Whatever
paying
that
for the
is.
policy, and then you're done with it. Then you got an insurance
Bada boom,
policy.
bada bip, and it's done. And
That's
now I
right.
got a warranty deed on a property that I just bought at the tax sale.
Exactly. And you will get a quick claim deed from the county, but what we do is we do have you sign a new deed, a warranty deed. That way you're getting a warranty. So you're basically signing it to yourself, giving yourself a
Uh-huh.
warranty deed. So
Okay. Which then allows me to freely go out and sell it to whoever I want to without concern about any previous title issues.
exactly. And even if
Okay.
you didn't have a sign over a warranty deed to yourself and you still have that quick
Sure.
claim deed, you'll it'll pop up at that title company or me that it's tax title, and then I'll look back and see a quick claim deed. But I always ask the client, did you get an insurance policy? Because sometimes they do. Instead of
Mm-hmm.
assuming and then ordering the FOIA and having to go through all that stuff, I just ask them. And once in a while, I'll get a seller like, yep, I got an insurance policy right after I bought it. They give me the owner's policy, and then boom, we can proceed. Let's close it.
All
So
right. I gotta wonder though, based on the number of questions that I've received specifically about buying properties in and around Wayne and Oakland counties, tax properties, by the way, in and around Wayne County, I gotta assume this is not a common thing for at least a lot of the investors that I'm working with,
yeah, yeah,
because they all seem very shocked, as I did when I didn't even know you could do that.
yeah, yeah. Um, so it's funny. So I work with a lot of like new like wholesalers all the time. There's
Yeah.
so many new wholesalers, and it's really cool seeing new people get in there. There's some people that won't haven't done a deal, but then there's a lot that have done so many, and you just have to stick with it and learn. And I always tell wholesalers the number one thing they tell wholesalers is find a good investor friendly title company, which I'm right here, guys. And then
That was what was that again? Apollo Title Agency.
Apollo
Did
Title
I hear that?
Agency. Yep,
There we go.
apollo So
We'll make sure we get that right on the screen.
there you go. I like that. So another thing is they yeah, find a good investor friendly title company. And I always tell them that you need to network. Like you need to find like other wholesalers. There's a lot of OG wholesalers out there like other wholesalers that, will help people. You can JV with other wholesalers.
Yep,
Like some wholesalers have the deal with the seller, but they don't have buyers, and other wholesalers have buyers, but they don't have a deal. So it's like just get out there and network and learn as much as you can, and call your title company like me, because I'll you can tell I'll sit there and just tell your ear off about title stuff, and I'd like them to learn, because at the end of the day, when like my wholesalers and agents, they learn it, it makes my job easier too, because I'm like, holy, you're
absolutely,
already ahead of it. You already did this, you already did that, and it's really nice.
absolutely,
Yep.
absolutely. I love. By the way, that's one thing I really love about you, Aaron. I love how you are willing to share information with not just me, because I'm pretty cool and I understand why you would do
Well,
that,
yeah.
but 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 just with everybody in general. That's why, as you know, one of anybody have any title agencies or any title questions, anything, first person I'm pointing them to is you,
Yes,
because
I
I
thank you.
appreciate the fact that you take the time to walk them through it.
Yep. And I love
That's
that. It's all a learning experience. And there's a lot of times where I'm learning too. And like I learn from you guys, like, you know, how to structure deals and how, and just everything. And
uh-huh.
so it's like it's all a learning experience for everybody. And I just love teaching and learning and just meeting new people. Like that's the number one thing with me is I love building relationships, and I
Okay.
love making friends with my clients. And we work with each other every day. You might as well have fun with it and make some friends. So that and learn
Absolutely.
and close deals. It's all fun.
Absolutely.
Yeah.
Absolutely.
Yeah.
Absolutely. All right. So since we're talking about investors, and that's pretty much who we're talking about, right?
Yep.
Do you do much land? Do many investors? Have you seen many investors put their properties in land trusts?
No, so here there's living trusts. I've only seen
Okay.
living trusts here, and I'd have
Okay.
never actually seen investors deal with living trusts or buy or sell in living trusts here or land trusts. A lot in
Hmm.
Florida. Though. There's a lot of
Yes.
yeah, a lot of land trusts down in Florida, and they would even well, for another time. There's so many different experiences and stuff, but they would do double closings basically in the land trust to get around like different requirements and stuff.
Hmm.
Yeah, but here I haven't seen any investors use trusts.
Yeah, that's one of the things that's absolutely amazing to me. Um, I'm sure you've heard of him, but I don't think you ever met him. But Wendy might have, or
Yeah.
other people might have. Land or Land, Ron LeGrand. I remember hearing of, and Lou Brown, those guys. Now, for anybody who's listening to this is relatively new, and when I say relatively new, if you were born in 2000, you didn't hear of them. You didn't. You didn't. I mean, they're old heads. They're like really big into they were really big into the education back in the 80s. And one of their favorite forms of taking property was using land trust. And there are a lot of benefits to that. We're not going to talk about that right now. But one of the things that I find though is as I get older, I've purchased properties in my own name. I've purchased properties in LLCs. I've purchased properties in C corps and other things. And I always keep coming back to land trust. Now I haven't done it yet. I haven't done it yet.
Yep.
We put personal properties in land trust, but I never purchased one yet. And it's funny because up here in Michigan, when I'm talking to other investors, I ask that same question and they look at me like, huh?
What? Yeah.
what's a,
Yeah, because it
what's a
is
land trust?
foreign. Yeah. Yep.
Yeah, it is so foreign. It is foreign to them, but that's okay. Whatever.
Yeah.
One of my mentors, Chris Haskins, he's out on the East Coast. That's the only way he buys properties. And
Really?
again, but he learned from the Ron LeGrands and the Lou Browns and all
Yep.
of those guys.
Well, it does
So
protect it. It's really good because I always see like the families when they're selling or buying
yep,
properties, and it's if
yep.
one, God forbid, your mom dies, but you choose a trustee, then it appoints another trustee. So it's actually has really good benefits. Like the land trust files are the easiest, especially when people pass away, because it just automatically passes it to the next person if you're in the land trust.
Tell,
And if
tell you
you
exactly what to do. It's right
exactly.
there.
It's like a manual, and there's times where there's a deed, and there's multiple people on the deed, and then um, you know there isn't any vesting, and that's one thing I always do, and that's another thing for another time. We'll talk about vesting and all that,
Okay.
but always make sure your deeds are vested because if the other person on tunnel with you dies, even though it's your wife or your mom, you automatically want that property to go to you. It was meant to go to you, the other person on title. But if there's no vesting, then you have to probate that person's interest, and it's a
So
hassle.
just to clarify, when you say vesting, do you mean recording?
No, so like vesting is basically the little part that you put behind your name on the deed. So for instance, like say you and I bought a property. It's like an
Okay.
investment property. And then if we bought it with just my name and your name on there and that's it, then if I die, the property, my
Half
interest has
goes
to be
goes
probated
to your
out.
heirs.
Yeah,
Yep.
if I want it to automatically go to you or automatically go to me if you pass away, you have to put a vesting on there. It's either husband and wife, like when a husband and wife purchase the property. So like if one
Yep.
person dies, it goes to the husband or wife, vice versa. Or you put as joint tenants with full rights of survivorship, and that
Hmm.
means if one person dies, it automatically goes to the next
Goes to
person
the
that's
other.
on title with you. If you put nothing, then that interest has to be probated. So I always hate like seeing like a husband and wife where, they didn't have a vesting on there. The title company didn't put the vesting, and the wife died. And then this
Yeah.
husband trying to sell the property and get rid of the property, but then I
And now
have
they
to
got
come
to
in
go
and
through all
say,
that.
you got to go
Yeah.
through probate. And it's just, I don't like telling them
Yeah.
that. So vesting is
Yeah.
big. You got to do that.
Yeah. We're gonna definitely have to talk about probate
Yeah.
because from from I look at probate from two different vantage points. As you know, as an investor, that's one thing where you're trying to help folk get through the situation, but also from an appraisal standpoint, it's it's very that's a very intense time. And one of the things that I found is, especially when they bring an appraiser in, when they bring an appraiser in, like myself, the goal is to get this thing, they've already been through so much,
Oh yeah. Yeah. Oh
right?
yeah.
I mean, because in the example that you just gave, for instance, I mean, this thing can be last for years. I have appraised properties that have been in probate for years before they finally got to the point where they were everybody at the table was finally like, fine, let's
Yep.
sell it.
Exactly.
I
They're just
mean,
done.
exactly. They were just done at that point. And like I said, this thing has been dragging on forever. And the thing that I always think about when I see stuff like that, because as a real estate professional, as we see a lot of stuff. People, life happens. Life
Oh yeah.
happens to everybody on all levels, and
Mhm.
it is so deep, humbling, humbling and hurtful when you see people go through suffering that they, it just
Yep.
I was about to curse. The stuff just drags out.
Can't you blurt that out? Yeah.
Yeah. Hey, we got to fix that one.
There
Yeah,
you
it just drags on, and that is horrible. And that
Yeah,
stuff, it
it
makes you
really is.
bitter. You can see it. Everybody, if you can just avoid that, do
Yeah.
what Aaron just said. Put something, put it
Put the
on the
best
title,
thing.
on the deed,
Call your
vest it.
title company. They will, they'll and bring that up and they'll help you. There's several different like options you can do for vesting, and the main important one is to make sure you have either husband or wife or joint tenants with full rights of survivorship on there. So yeah, call your title company. They'll help you with that. Even attorney, but they're your title company is always there for you. At least,
All
I'm
right.
always there for you.
Yeah, like you've already been there for me.
Exactly. Exactly.
There we go. There we
There.
go. Oh, all right, Aaron. So we're going to start wrapping this up. But before we do, I got a couple of specific questions that some people asked me. So you
Yes,
ready for them?
I am.
All
Let's
righty. All righty. Good deal. So first question, who's your underwriter?
Fidelity is my main one. I have West Core and
Okay.
First American, but Fidelity is what I write on all the wholesale deals because they
Okay.
are very easygoing, and it's just a lot easier to do assignments and double closings and everything on Fidelity.
Okay.
And then I'm working on bringing on Old Republic too, but Fidelity is
Okay.
the main underwriter we use.
All right. You mentioned something that perked my ears up. Double closings? So you're allowing double closings?
Yep.
You can do double closings
Oh,
again?
I do any type of investor deal you got, I'll do for you. So double closings and assignments are basically the main things that I do. Subject twos, all that,
Okay.
everything. But land contracts, whatever you have. But yeah, I do double closings a lot. Like I said, we're insured or licensed in Colorado, and most wholesalers, actually all wholesalers have to do double
Have to.
closings out there. Yeah,
Okay.
so we always do double
Okay.
closing. But yeah, the only thing with just to let in the number one question that I guess that get asked all the time is, can you use M buyers funds to fund the first side, the A to B side? So down
Yeah.
in Florida, we used to be able to use the M buyers funds to fund the A to B side. But now with the Dodd-Frank Act, we're not able to do that. So most wholesalers either fund it themselves, the A to B side, or they get transactional funders.
Transactional funding.
Yeah, and I've got a lot of different transactional funders they can choose from if they don't have any. So we'll make it
Yeah.
happen.
That's what I'm talking about. That's what I'm talking about. So what you're telling me is, if I'm a newer wholesaler, say, I got a smoking deal. or maybe even not a smoking deal. Hell, if you're a new wholesaler, any deal that you can close is a smoking deal.
That's right. Yep.
So there you go. If you're gonna get a check at the end of the day,
Oh gosh,
congratulations.
anything is smoking deal. That's right.
Congratulations. So you're telling me that if I've got my buyer or I've got my seller, I got my buyer, I'm in the middle. If working through you and you're sharing your relationships, I can find somebody to fund it. The in between spots here, so I can get my little piece of the pie right there, right?
So most wholesalers, investors, they when they do a double closing, like any type of transaction, like I like it to make it to where you as the client, the hardest part for you should be getting it under contract, negotiating, getting it under contract with the buyers and the sellers and all that stuff. Once you're done with that, send it to me and I'll handle everything after that, even down to your transactional funding. Like I'll make sure you get the cheapest, rate with a transactional funder, and then make sure everything's flawless. That way you don't have to deal with that. And then work with the buyer seller, get everything scheduled and close for you.
And this is why Apollo Title Agency and Aaron Kopczyk is my dude.
Yep.
This is why.
That,
Because you remember that black box I talked about earlier? It's still a black box. I negotiate the deal, black box, pick up a check. That that's what I'm
that's
talking
right.
about.
That's right.
That is exactly what I'm talking about. All right. Next question. I think you already hit on this one, but I just want to clarify. One, if I had for properties purchased in tax sales, they can be if I purchase property in tax sale possibly within a month later, going through the steps that you're talking about, I can have title insurance on it.
Yes. Yep. Definitely. So, and again, to get that, we just order the FOIA package, which is the foreclosure package, and then, run our usual title search. We do the
Okay.
review process and then we issue the policy. It's super easy. So, anytime you buy at the tax auction, I always recommend getting an insurance policy because eventually the property is going to be sold to a buyer that's more than likely going to want a title policy. So you might
Yep.
as well just nip it in the butt right at the beginning and get with your title company, get it insured. Even if you're keeping the property for yourself, you get
Mm-hmm.
an insurance policy because you never know. And like I've had one where, we actually the seller didn't know this, but they bought it at tax auction and there was a mortgage, a $40,000 mortgage that was not served properly. So we did our
Ooh.
review process. We saw that they weren't served properly, and then they reached out, and this lender wanted was going to wanting to send a payoff so we can pay it off and everything. So I always another thing to bring back to these investors is you can always get with your title company and run like a pre-title search on any property that you have that you're interested in at auction. So we can run like if it's especially Detroit and Oakland, we can usually do those super quick. We can look at it. We can do a title search and have it within probably a few hours or by the end of the day. And that way you have an idea of what's on there. And then so he had to actually take that back to the county. I'm not sure
Mm-hmm.
exactly how it ended, but yeah, that was the one where there was the one file I've ever had where there was an issue with the FOIA or with somebody not being, served
Not,
properly.
yeah, not doing whatever it was that was supposed to happen.
Exactly. Yeah.
Yeah, I see how that can be a big issue. I really do. Okay, so following that along, just to make sure I understand, if I can buy a property at tax auction, I can get title insurance on it within a month of me purchasing it, and I'm just throwing that month out because you figure it takes time
Yeah.
to to email and to correspond with whatever county you're dealing with. It takes time for them to put together the package. It takes
Mm.
time to review the package, and then it takes time to close it. Right.
Yeah. Yeah.
So you
Exactly.
figure about a month,
Yeah.
right after everything's all said and done. So I can buy a property today at the tax auction. Within a month later, I can have title insurance, and it's even before after I had that title insurance, I can sell it to whoever I want to sell it to.
Yep. And then we can issue the policy and insure the transaction for that buyer.
Bam.
So, bam.
So, so what you're telling me is there's absolutely no hold up between the time I purchase a property, time I get insured, and the time I can sell it. or there's
No,
no hold time?
the only holdup would be from the county giving us a FOIA package. So some we've had some come back
Okay.
within days, and then we've had one that took like a few weeks or whatever. So that would be the only holdup. Like our title search process is super easy. I can have it back within 24, 48 hours. And then the only thing is that FOIA package. So that's why as soon as you get it at tax auction, we order that FOIA package immediately. And then since it just got foreclosed on and they're putting that package together, that's what could take a couple weeks. Usually we say
Sure.
about 2 weeks to a month. And then once we get that, it's easy. All we do is just review both the title search, make sure everything's, perfect, and then review that FOIA package and then issue that policy. All you have to do is e-sign the settlement statement and pay $100 closing fee along with or settlement fee along with the insurance premium, and then you got insurance.
You said e-sign. You mean I don't even have to be there in Auburn Hills
No, that's enough. So I do have Auburn Hills that you can go to. There are a lot of people that like to that
to
live out
show
in
up
Auburn
and
Hills or just want to go to an
okay,
office, but I'm very virtual. So a lot of most of my clients are just from around the world. There's everywhere. So I had
absolutely.
to adapt to that. So I've got buyers can e-sign their documents 100% of the time. They can always e-sign, DocuSign. Sellers also have the e-signing capability. So if you're out of the
Okay.
country or you just are afraid of COVID or you just want to e-sign, you can sign with one of our e-notaries. I also have physical people, like physical notaries that everywhere in the United States. It doesn't matter where you are at, as long as you give me an address and a time you want to sign, I'll have somebody knocking at your door with the closing package to sign you up. So we
That's
we
what I'm
like to
talking
make it
about.
easy on the buyers and the sellers to sign their transactions. And since everybody's just everywhere, we got to make it easy. So, but you
That's
could always come to
exactly
Auburn
what it
Hills to visit and sign your docs there.
there we
So
go.
that's an
There we
option.
go.
Yeah.
And what just one of the coolest things that you did when we closed that deal over in Redford and the the, let's see, the owner was in Canada initially, but then somewhere during the transaction she moved to England and
Oh my gosh, yeah,
somebody else moved.
I remember.
And
Yeah.
and throughout all of this, hey, look, we throughout all of this, throughout multiple time zones, we got this thing done, and you were
Yeah.
right at the center of that.
Yeah.
And I'm
Yeah.
gonna be honest with
Teamwork.
you,
That
there
was
were
teamwork. That was teamwork.
that was
Yeah,
a lot of teamwork.
that
That was
was.
a lot of email
Yeah.
and a lot of late night calls, but we
Yeah.
got it done.
And
But we got it
that's
done.
why I always go back to like why I love building relationships with my clients, because again, we work with each other every day and you might as well have a good relationship, but it's like we can rely on each other. We're like a family. We can rely on each other. If I need you to do something, you'll get right on it. If you need me to do something, I can get right on it. And it's a team. It's teamwork. At the end of the day, our goal is
Absolutely,
to get that closed and have both of us get paid. And then that's it. That's what we
that
need to
is the
do. So,
goal.
yep,
That is
exactly.
the goal, and we do that, and we
We
do
do.
that,
Yeah.
and there we go. All right, I got one last one for you, and this was from a good friend of mine. He's a new investor, little older agent. One of the things that he was thinking about, he was like, Jimmy, man, if you talk to Aaron, you got to tell me. I want to know, how did he get into title insurance? How did he get into that business? Because that's just so fascinating to me. I said, the black box is fascinating to you? That's what
Yeah.
I said to him. But I said, okay, well, I'll ask. So here I am. I'm
Well,
asking.
I'll start from the beginning then. I'll tell you my story. So all the way leading up to Apollo. So back in what was it, 2008? It was, remember that crash, the big
Yep,
crash.
I do.
So I
I
got
do.
into it like literally a couple months after the crash. I didn't even know what a deed or a mortgage was at that time. I was just younger and everything, and I knew there was real estate sales and stuff like that, but I didn't know anything about it. And then my aunt, she was starting a title company down in Florida, Winter Springs, Florida. So at that time, I was living down in like towards like Fort Lauderdale, Miami, and she's like, "Would you like to come up here and help me start this title company?" I'm like, "Of course." I didn't know anything about it, so I moved up there and I started out as the receptionist. And I did all the marketing and stuff like that, but I sat up at the front desk and I was the receptionist. And I literally learned from the ground up. I learned what a deed was, what a mortgage was, title insurance, all that stuff, how to communicate with clients, preparing closing documents and all that. So I
Hmm.
moved up to a pre-processor and then a processor. And then I left there. I left, I think it was the hurricanes that kind of scared me when I was back in the day. It wasn't the hurricane. So I just missed my family back up north. So I left
Okay.
my aunt's title company and I actually moved up to Alabama where my dad moved. And
Hmm.
it's random. So I moved up to Alabama and there was a mortgage broker and a real estate agent that just said, "Hey, I want to start a title company." So I helped them start that title company, and I lasted in Alabama for a year. I love visiting Alabama, but just Alabama wasn't for me. Like my dad loves it, but I just like visiting. So then
Hey,
I moved back
that's why
up
we got
to
50 states.
exactly. So then I moved back up to Michigan and I just put my resume out there on Indeed, and I got a call back from Legacy Title, and I went and worked for Legacy Title. And Wendy, the owner, she's an investor as well. So I learned a lot of stuff from
Hmm.
her. I helped her build like the investor division, and then I was there for about I think 6 years, and then I got the opportunity to be able to start Apollo. So I went and started Apollo, and I just wanted to have, like I said, have a home base for investors. I wanted to create a title company that is fully there for investors and understands investors and is creative and thinks outside the box. And, you know, I could only do that if I took control and had control over everything. And
Hmm.
that's where I'm at with Apollo. So now I close deals for investors. I do regular retail deals with agents too, but I
Hmm.
mainly my bread and butter is investors, and I love investor files. I love the investors. I live and breathe investor files, and I'll
There we
die
go.
loving investor files. So,
There we go. There
yep.
we go. And just for the record, one of so anybody who's out there who's thinking about title companies and whatnot, I will tell you this: as an investor, as a former, I guess I am a broker, but as a former realtor, I'll put it that way. I can tell you this: there are not a hell of a lot of investor-friendly title companies.
No.
There are title companies that say they're investor-friendly until the shit hits the fan.
Yep.
And then they're gone. I'm going to repeat
Exactly.
that. They are gone. And you got nobody to talk to, nobody to help you get the thing closed. I can legitimately say this about Aaron. Aaron has been with me through some stuff on multiple deals consistently. And one of the things that he's very humble. He's a humble dude. I don't want to say that humble dude, but he is responsible for helping a hell of a lot of families in general. I'm here in Michigan, helping a lot of families in Michigan take care of their business so that they can do whatever the hell they needed to do to move on with their lives. Aaron is the cause of that. And I want to thank you on behalf of them and myself as an investor.
I appreciate that.
Thank you,
Thank you
Aaron.
so much. I love you, man. You're awesome.
No
You're an
worries.
awesome
No
dude.
worries. Before we wrap this sucker up, man, let me ask one more question. Where are you licensed? Where are you doing business at? And how can we catch up with
So, New Jersey, Michigan, Pennsylvania, Colorado, Missouri, Florida, and California just recently. And we're working on getting licensed everywhere. And I
you?
think you're
Okay.
gonna like a little all the states I'm licensed in
They're,
somewhere on
they're
the
going to be
deal.
scrolled down there
Yeah.
somewhere. Yeah.
But if any investors out there that has any questions or they just want to know how things should be structured or just anything in the investor world, like I've been around for a while and I've seen it and done it, I can always help answer questions and just be that source for you to or that resource for you. If you do have any questions or want to learn how to get started or whatever, I can point you in the direction. I've got a lot of contacts and point you in the direction and just help you. And then obviously close your transactions when you get something under contract. Um,
Absolutely.
but yeah, you guys can call, email, text me anytime. I'm always here. I always like to be available at all times. I do go to bed at midnight, so as long as it's before midnight.
All right. Before midnight, and I'm going to amend that a little bit. Leave this man. He's got a little newborn, so let's make it 11. He's got to get some sleep
Okay,
in there,
I'll take
right?
that. I'll take that.
Got to get some sleep in there. Okay, all of his Aaron's contact information is going to be listed below in the comment section down there, and we're going to also blast it a few other places. And with that, I want to thank you, Aaron, of Apollo Title Agency here in Auburn Hills, Michigan. Thank you. Like I said, man, I appreciate you coming on and talking to us about just what a title company does, and especially dealing what we can do when we go and buy properties at the tax sale, which is coming up pretty soon, by the way.
There you go. Yeah.
So
thank you for having me. I really appreciate it. This was fun. Definitely fun.
Okay. There we go. And we got to do it again, man. We're going to have to talk about probate properties.
There you
We're
go.
going to have to talk about what happens in a divorce situation. Man, I got we're going to have you back.
I'll start brainstorming. There we go. We'll come up with some good stuff. I will.
There we go. Thank you, sir. I appreciate you.
You're welcome. Thank you very much.
All right.